The global economy is actually doing quite well, especially the US economy shows resilience. That is definitely great news. On the flip side, however, we have seen a bit more disappointments recently when economic data has been published. That is not unusual, that can happen, but we should not ignore it. There could be actually the possibility that we have to talk about the outlook of a recession going forward again. So far, this year has been very much dominated by equity markets. In terms of performance, they have outperformed basically all other asset classes by quite a margin. That is good news, but at the same time, this is now reflected also in high valuations of equity markets. There's not really a cheap equity market out there. And so there could be a risk in the short term that risk appetite goes away in the market because markets seem to be too expensive. Overall, however, we think risks are balanced at the moment, so there's still also very positive drivers for equity markets, and against this backdrop, we are neutrally positioned with regard to equities. Well, the interest rate cuts by the European Central Bank and the Swiss National Bank have reanimated bond markets a bit recently, but the overall outlook looks similar. This is positive actually, because at current levels, bonds offer a decent yield, and at the same time, they provide stability if the positive sentiment at equity markets, for instance, turns sour again. And on top of that, we see actually some interesting market segments still because of the inverted yield curve. For instance, US high yield bonds with a short duration, they remain very attractive in the current environment.